Hey guys, it's Canadian Kyle here at the Wealth Orders Podcast, and today I'm joined with James Dendle. He is the Vice President of Evaluations and Investor Relations at Triple Flag Precious Metals. They're a royalty and streaming company with the ticker symbol TFPM on the TSX. So James, thanks for coming on to tell your story.
Thanks for having me. It's a pleasure to be here.
So I always start off with first-time guests by asking the same question. What were you doing when you were my age? I'm 26, so what were you doing from 20 to 26 years old?
Yeah, so I suppose from 20, I was finishing my master's in mining geology, or my degree actually, I suppose at 20. I did an undergraduate degree in applied geology in the UK and a master's in mining geology. And then I went from that educational program, I focused on resource estimation and joined a consulting company based in the UK. And then really from in my early 20s after graduating, I was working all over the world, but a lot of time spent in West Africa, particularly, I suppose, Sierra Leone and Burkina Faso, and a lot of travel around that region. I also spent a lot of time in Russia working with Russian clients on a number of projects. So that was what I was up to. I was doing a lot of resource work, looking to expand resource bases through drilling, definition, geological interpretation at various different projects. So helping companies take their projects from a certain point and really try and fast track the expansion of the resource as part of their exploration programs. I was also doing a lot of work at the same time on more advanced projects and operating mines as part of due diligence processes for M&A financings that we were involved in at the time. So it was quite a broad set of things I was doing. A lot of travel, a lot of time. I remember I rented an apartment in the UK, and I think in the first year I spent about 6 weeks in it, and probably in the second year I spent about 7 weeks in it, and realised that was a very poor financial choice. So yeah, that's sort of what I was up to at the time.
And this consultant firm, in your youth, was this the SRK consultant? Because I personally never heard of them before, and I see you were a senior consultant there. You mustn't have been senior in your 20s.
No, I joined SRK out of university. They're a very well respected global consultancy, mining focused, and I really joined a wonderful team of very capable, fiercely intelligent mining professionals. And it was a really wonderful opportunity to work with some people who now are friends and and have been colleagues for a long time, who are really at the cutting edge of what they were doing. So I was put into an environment that was I really think the perfect environment for you to see a broad range of things, meet a very broad range of people, understand different approaches to doing the same thing, and it was great. And it's a wonderful company, and in fact, some of my closest friends are people I met during that time. So I was very fortunate to have an experience with a company like that.
Thank you. And now you're the VP of Investor Relations, which many people know. But what about the VP of Evaluations? What is the VP of Evaluations, and what's the day in the life of James now?
Yeah, good question. As I went through my career from where I just commented, I was increasingly involved and personally interested in understanding the broader picture of mines. What makes mines, exploration projects, feasibility studies, everything in between. What makes them tick? What makes them go well, go badly? It's not just geology. It's not just mining. It's the whole process. And I became increasingly interested in understanding the whole mining value chain and metals value chain. So as I did that, I was doing more multidisciplinary work on technical studies, on due diligence, and that took me to a wonderful opportunity to work with some of the former Xstrata executives when they set up a fund called X2 Resources in London as a consultant, who were fantastically talented, or are fantastically talented mining people, and working with groups like that. There are others too. Led me to appreciate that there was actually some value in having actually a broader set of expertise. So being able to understand, the ins and outs of maybe hydrogeology, whilst not being an expert in the subject, and same across various other disciplines. So I found that very compelling, personally very intellectually satisfying. And when Sean set up our founder, the Triple Flag at the business in 2016, Sean was an executive at Xstrata from pretty much the beginning of that company right to the end. Um, he was introduced to me by some of his former colleagues, and I joined Sean as a resource geologist principally. And as I spent more time with Triple Flag, I was doing more of what I was doing prior to joining, which was the multidisciplinary due diligence in amongst all the resource geology work I was doing. And that sort of continued to grow. And then about a year or two ago, Sean pointed out that resource geology doesn't really summarize what I actually do on a day-to-day basis, that accurately. So we changed my title, and we're as an organization, we're not desperately concerned about titles, but we thought it was sort of, fair to be accurate. And then, in 2019, we were looking to take our business public initially and thinking about what that might involve. And Sean was very keen to have someone with a technical background who had been involved with all of the investments we've made, and who understands the assets that we have exposure to in a lot of detail, to be one of the people responsible for talking about our company to new investors. So, Sean Usmar, our CEO, is a very is quite an inspirational guy, to be honest, and gives people a lot of opportunity. And he gave me the opportunity to take on the investor relations role in addition to my work I was doing, which initially I thought was a terrible idea because I had no experience whatsoever in investor relations. But I welcomed the challenge. I thought it would be interesting and enjoyable, and certainly a learning experience, if nothing else. So I said yes, and took that role on alongside my other responsibilities, but with a lot of support from my colleagues. We all pitch in, we all work in different areas. So I'm by no means the only guy doing this. There's the whole team contributes in different ways, which is very much part of our organizational DNA. We're a small team, we're close knit, lots of output and functionality. So whilst I've taken that role on, it's as have some others on the investor relations and communication side. So it's been a lot of fun. And we IPO'd the company last year, which was an amazing experience to go from, starting a private company, taking it from nothing with Sean and the team, through to, one of the largest mining IPOs that's been done for quite some time. So it was a wonderful experience. And now my day-to-day is a combination of technical work, evaluations on new deals, monitoring of our existing asset base, talking to our shareholders, talking to new investors, working on our communication strategy with the team here. So it's a bit of a blend, and it ebbs and flows. There are times when we're in deal execution mode where, we're working extremely long hours on new assets, for example. There are times perhaps around quarter ends and reporting season where we're a bit more focused on the shareholder interaction, communications, and that sort of stuff. So it sort of goes up and down, but it's a really nice balance of the stuff I really love, which is the technical operational element, and learning something new, and actually talking to shareholders. It's been wonderful to talk to investors in the sector. There's such a breadth of experience of people you come across, and it's really enjoyable understanding their perspectives, what they like, what they don't like, how they look at things. It's been a very satisfying experience.
Perfect. And thank you for taking the time to share your story here with my listeners. And maybe you can do that right now for the people that haven't looked into your company. Who is Triple Flags? Maybe touch on your portfolio.
Yeah, sure. So Triple Flag was set up by Sean Usmar. Sean, as I said, is South African by origin. He's lived in a few different countries, but the name stems from the birth country of each of his three children. So South Africa, the United Kingdom, and Canada. So that's the story behind the name, which not too many people know, but that's what it is. Business was set up in 2016. We had the backing, or have the backing, of Elliott Management, which is a multi-asset, multi-strategy investment fund based in New York. Wonderful team of highly analytical, tenacious, and reputable investors with a very long-term focus, which I know Sean felt was really important coming into the commodity space. So Sean set up the business with Elliot, with nothing. I met him in London. I think he'd been going for a few weeks, and it was, he was sleeping on it in a friend's apartment, and keeping costs low, and working out how to get this thing going. So our first deal was a silver stream on a mine in Peru, with Nexa Resources at the Cerro Lindo mine, which is a very large, highly productive underground copper, zinc, silver, and lead mine, and we stream silver out of it. That's been a wonderful investment, and from there, we've grown the company with the acquisition of royalties on projects, or mines rather, like North Parks and Young Davidson, which have been very, very successful. Development projects like Buritica in Colombia, Nevada Copper's Pumpkin Hollow project, and a raft of others. And then some sort of cornerstone streams like our Royal Bafokeng Platinum stream in South Africa, and our North Park stream on an asset in Australia called North Parks. So what if you roll forward today, from really starting with nothing in 2016, we've got a business that is, by net asset value, about 90% producing assets, has a very long portfolio life in excess of 20 years, which is right up there with, Wheaton Precious Metals and Franco-Nevada, and in advance of a lot of our other peers in the sector. A lot of our assets are in the bottom half of the cost curve, which is really important when you've got a long life portfolio that you want to withstand all sorts of different price environments. And we've got a great set of operators in the portfolio as well. So we feel like we've built a really high quality business. And if you look at the historical performance, the sort of last 12-month cash flows are averaging out about 122 million, from zero in 2016. So we've really delivered a lot of growth and a lot of value accretion over that period. So today we sit here as a company with as you said, a Toronto listing, market capitalization just under $2 billion US. We produce, as I said, we've the last 12 months cash flow is about 122 million. We've just announced our 2021 sales, which was just in excess of our guidance of about just over 83,000 gold equivalent ounces. And we're poised for a good outlook. There's assets in the portfolio that are continuing to ramp up and increase their output, and we've put in the public domain what we see as our long-term outlook, which is a very stable, over a 5 to 10 year period, 105,000 gold equivalent ounces a year. So it's a very sustained production outlook from embedded investments that we've paid for. They're in the portfolio right now. Mm-hmm. So we think we're really happy with the business we've built, but we're pretty restless people. There's a lot more to do. Now that we're public, it presents a lot more opportunities to look at different things. And we've got around $600 million that we can deploy into the sector. So we're keen to do so and continue to grow, albeit in a very disciplined and value-focused way. Our team are big shareholders in this business. We're very aligned to our shareholders insofar as we're not about to go and pursue growth for the sake of it. But we want to continue doing what we've been doing and make this a bigger and more diverse company over the coming years. And
is there any advantage to being a private royalty and streaming company, because this was originated in 2016 and it just came to market last year? So why so long?
Yeah, I think what we wanted to do, and with the backing of Elliot, which has tremendous financial capacity, we wanted to deploy capital into the sector to compete with the likes of Franco-Nevada and Wheaton. That was the level we were aiming at. So we felt that by doing that, or rather take a step back, we felt we had the capability in the team to do that. We had the structuring, due diligence, legal, commercial capability to really compete with those guys. And we felt we wanted to do that for a period of time until we had a business of substance and scale that produced meaningful cash flows, a good number of assets that, when public, would have the financial capacity to compete for any streams in the sector. So had we, done our first deal, then gone public, we'd have a significantly smaller business. We would have been constrained perhaps with the amount of capital we could deploy. Whereas staying private, we had flexibility to to grow and deploy capital that was really more a function of what Elliott could provide to us as opposed to what we could raise in the markets or what we could get from banks. So we took the decision to IPO last year because we'd reached a phase where we had enough substance in the business, producing a lot of cash flow, very diverse asset base, contributing to that cash flow, and we had the financial capacity on the balance sheet between our cash position and our revolving credit facility to compete for any deal in the sector. And the biggest deal that's been done since we've been in existence was by us. It was $550 million US. We've got $600 million of capacity. So we really felt that we were in a good spot to continue what we've been doing.
Sorry, I just lost connection there. Okay, thank you for that. You answered that well. I wanted to get your opinion. Do you prefer streams more than royalties? Is there a benefit? What do you like and why?
The most important thing for us is to have exposure to the top line, to the revenue line at the mine. So we don't want to have exposure to operating costs, capital costs directly, and all that sort of stuff. So whether it's streams or royalties, you end up with that top line exposure. So that's the most important thing. Obviously, with the stream, you have an ongoing payment. And what you typically find when you look at the space is the larger deals tend to be streams, smaller deals tend to be royalties, or they tend to be royalties that were written many years ago as a consequence of M&A. So there's a tax efficiency to streams that you don't get with royalties. So fundamentally, it's the same construct. It's really around how they're treated from an accounting and tax point of view. So long way to say we're pretty much agnostic in terms of the commodity, except in one area which I think is important. If you look at the big streams, they tend to be precious metals that are produced as a byproduct of base metal mining. Mm-hmm. And why that's important is we have a very constructive view on base metals for obvious reasons with decarbonisation. You tend to find that base metal assets have a longer life of mine, visible life, than most gold assets, which is why you see, the likes of us, Wheaton Precious and Franco-Nevada, having very long mine lives by comparison to the, equivalent sized gold companies. So we really like that dynamic. And with royalties, you're obviously taking a portion of the commodity the mine operator cares about the most. So there's a natural conflict there. Whereas with the byproduct streaming, there's more of a symbiosis. If you're a copper company, you probably don't really care that much about the gold. Of course, it's nice to have the revenue. So there are some nuances, but in principle, it's the exposure to the top line that's of the greatest importance.
And what about third-party royalties or royalty and stream creation?
Yeah, great question. We've done both. If you think about the capital we've deployed, the bulk has been creating new streams and royalties. We have had some success in acquiring royalties that have been written by others, and a good example of that would be Fosterville. We acquired the royalty on the Fosterville mine operated by Kirkland Lake, although only for a few more days, and then it will be Agnico. Just when the Swan Zone was looking really good, they were in the sort of upper part of that. And obviously, with the performance of that mine, it's far outperformed our expectations. So that's a really nice example of that third-party royalty acquisition. Same with Young Davidson, and we also have royalties on Barrick's Hemlo mine and West Dome's Eagle River mine. So those have been really good for us, and we'll continue to look to buy third-party royalties just in the same way as we continue to put in place new streams and royalties. I think just from our team's DNA, we like putting new capital in the space for new agreements. You're helping develop the next generation of mines, or you're enabling a company to meet its strategic objectives, and we enjoy that, and we enjoy the relationships that process builds. Because if you go through the process of negotiating a stream, by the end of it, you have a pretty good relationship with the other side. You spend a lot of time together. Whereas if you buy a royalty on a property, that doesn't come with the same relationship. So that would be the sort of soft factor that might push us more towards, new deals in some ways.
Yeah, thank you for that. I think I have maybe multiple, but I know for sure I had one of your projects on the show back probably 10 months ago. I started this podcast a year ago, and they were one of the first guests. It was Excelsior Mining and
Okay.
the Gunnison project. I was learning about the in situ method for copper mining. I'm wondering, I haven't looked into their company for months now. How's that going for them?
Yeah, I mean, Gunnison's going slowly for them. They've, in situ leaching works. When you put exposed copper oxides to acid, it leaches and copper precipitates. The issue they've run into is with CO2 generation in the well field, which was unexpected. So they've got a program in place now to firstly address the CO2 generation in the well field. So they'll be adding some additional equipment, a raffinate neutralization plant to help that. Whilst they're doing it, they're also in the process of exploring the Johnson camp. So they have some additional open pits they can treat through the same facility, which we benefit from the metal deliveries there. So they are going slowly. They have had some ramp up challenges, but they're sort of heading in the right direction. And the benefit of our business model being on the streaming and royalty side is we can afford to be very patient on these assets. The production we feel will come. It's just a question of time. And for us, it's be nice to have it when copper is above $4 a pound, of course, but we can be patient.
Thank you for that. And I was looking at your corporate deck and read your sustainability report or your ESG report, and you guys are proud at saying ESG is core value of your company. And at the beginning of this podcast, you're talking about all the different factors when looking at an asset. So I'm just wondering, because last year, what was it, 40% of your revenue came from Latin America. And a lot of people won't even look at Latin America. And your biggest asset was in Peru, right? Which was a noteworthy or newsworthy year last year. So I'm just wondering, how do you pick assets in countries with more jurisdictional or political risk?
I think it's to some degree one can decouple some of the considerations that are typically tied up in ESG with that of jurisdictional risk, because I think when we think about counterparties and investing in certain countries, we want great operators with a track record in that country. We want them to have a record of excellent stakeholder relations, and including their governments and local communities. We also need to ensure that our contracts have security. They have good legal protections, and they're in a country that recognizes the enforceability of the rule of law. So we consider all those things when we look at investments. So Peru has all of those characteristics, and when you look at Nexa Resources, they do as well. So from our point of view, it's a good investing jurisdiction. We saw last year, obviously, very well covered political situation in Peru. I could probably draw a chart of people's attention and the questions I got on that subject, and it went up. And at one point there was all this talk about mines being nationalized, and then as sort of expected, the reality of the rhetoric to impose in a country that has good institutions and the rule of law, things settle down, and you see a situation where perhaps there'll be other forms of financial gain by host governments versus the mining companies, but ultimately it all kind of settles down. So that's what we saw in Peru last year. Next has been unaffected. Our stream has been unaffected, and we're in these deals for a really long time. We're there for seriously long time, decades. So in any country, and we've seen it in Australia and the US and lots of other places, you get political blips, things happen, and there's air pockets that might push attention towards that country for a period of time. But in the context of being associated with an asset for a couple of decades, you've got to look through that to the fundamentals of the country. I think that's what we've tried to do.
And I could see why people would be phoning you up on that, because it is the largest underground mine in Peru, right? So I'm just wondering, how does the community, what's the sentiment like with this mine and where it's located?
It's a very interesting question, and it is the largest underground mine in Peru. That is correct, but it's by no means the largest mine in Peru. There are lots of other very large mines in Peru, as you know, and they tend to get a lot more scrutiny and a lot more pressure from NGOs because they're so much higher profile. So there are some mega operations there. Also, where you are in Peru makes a very big difference. Cerro Lindo is located in a very sparsely populated area, so they're not competing with local people for infrastructure and access, water, that sort of thing. And Nexa actually own the road. There's a private road essentially that goes up to the mine. All the water, or the vast majority of the water, is pumped up from a reverse osmosis plant that Nexa own on the coast up to the mine. So there are pressures that one encounters at other operations that we haven't seen at Cerro Lindo, and I think that has made it quite a peaceful operation. And before we invested, we could see that there was a track record of good stakeholder relations and really no major problems. They did have a 2-day, or they did suspend production for a couple of days last year. There was a blockage at the mine. Some local people who weren't representative of the local population, they were sort of informal protesters, caused a blockade. Small numbers, didn't affect production, and it's all sort of been addressed and settled down. But that's just the nature of the mining sector, and sometimes these things happen. So Peru is a country we're very happy to be invested in, and with a partner like Nexa, it's a great one for us.
Thank you. And that report I was looking at, I was noticing that you guys, which a lot of companies don't mention, and I think it's strange, but you mention the water, because both the water source and supply and the tailings are important when you're looking at the environmental aspect of an asset, right?
Yeah, I think it's a really big deal. And what I'd like to see for all mining companies and all mine assets is a better quantification of greenhouse gas emissions at the asset level, not at the corporate level. Water use, because water use it's always been an issue, but it's becoming more of an issue. And understanding asset level water use is going to be important, increasingly important. And also the impact on biodiversity and the land use intensity of these operations. I think all this is getting more important, every month. And having granular information at the asset level is what we will need to understand, what is a sort of first quartile operation, because it's not just about carbon intensity. It's not just about, water use. You have to look at all these things in combination.
And what about this carbon neutrality? I saw it on your corporate deck, just the word carbon neutrality, but I know a company that their whole niche differentiating factor is carbon neutrality. I'm having a hard time with that word right now, but what does it mean to your company?
Yeah, it's interesting. I mean, we asked ourselves the question, what is the carbon footprint of the metals that drive our revenue? And it's quite difficult to work it out. So we did a lot of fundamental first principles work to build up what we consider to be the carbon footprint of our metals. Now, I won't get into all the ins and outs of how greenhouse gas emissions are reported, but the bottom line is there's no neat, easy category for streaming royalty companies. In the same way as there isn't for many other businesses, particularly when it comes to scope 3. So we developed an approach we thought was good, and solved or represented what we are doing. So that's our corporate activities, all the indirect emissions associated with that, but also the emissions associated with the metals that we have an entitlement to, all the way through to finished metal. We're not a business selling metals. We're not a commodity provider. And our interest stops at that finished metals point. So we work that out for our business. We monitor it. We price it into our future deals, and we offset with accredited carbon credits. I think it's important to us, but I think the one thing I'd say is, this is all across the whole sector, but and many others. This is still a work in progress. Accounting and reporting these numbers is complex and has not been solved, I don't think. Our approach is the best one we could come up with, which doesn't mean it's, the only one by any stretch of the imagination, but we wanted to do something that captured that whole value chain. And then on the carbon offset side, really it's it's what we can do. It's not perfect. As a society, we need to reduce carbon intensity, not just offset it. So we're always looking at what businesses and mining companies are doing to reduce their carbon intensity. So our philosophy is that carbon credits are great when you've done everything else you can do and you offset what's left over. So that's sort of how we look at it, and it goes back to Xstrata days, or all of our ESG focus, really, because that was a company that was very focused on sustainability, I suppose it was referred to now then, and ESG as it's referred to now. So it's very much ingrained in the DNA of our team and Sean in particular and our board.
Thank you. And now you're a publicly traded company. If people were interested in this company and they go to their brokerage account, they might see two different ticker symbols, one with a U on the end. What's the difference there?
Yeah, when we listed in May, the functional currency of our business is US dollars for obvious reasons. The metal prices are settled in that currency. We're a Toronto listed company. The exchange offered us the ability to have two tickers. So it's the same share, but an investor can buy and sell either in US dollars or in Canadian dollars. But in any case, they're buying and selling the same share. So it's really just ease of sort of to reduce the friction between currencies. The future for our business just on listing is really to be US and Canadian listed company with a New York ticker. So that's kind of where we're going.
Thank you. And how's your stock performing relative to the price of gold and other seniors? Is it rather the same, similar?
Yeah, the performance of the stock is an interesting one because we have a pretty small free float. We raised just over $260 million at IPO US dollars. About 82% of the shares are owned by Elliott. Management is just under 5%, and the balance is public, so it's quite small. A lot of our investors that came in the IPO are very blue chip institutions who are long-term holders of the stock. So we don't see much liquidity in the stock. In fact, the liquidity is very, very low. So that's meant that we've had periods where we've suffered with low liquidity. It doesn't take many shares in the market to drive the price down, in the same way as it doesn't take many shares being bought to drive it back up. So after the IPO, we had kind of one seller that pushed the price down significantly, and then we had a large number of buyers from really mid-October that drove the price back up. And our performance, since IPO has actually been, one of the better streaming and royalty companies since May 2021. But it is, subject to the low liquidity, both on the down and then on the up. So, one of our strategic goals is to increase the free float. We need to eventually have more stock in the market for investors to buy and sell.
Thank you for that. And who is the ideal investor, or maybe how should I ask this question? Because there's so many royalty and streaming companies out there, and they're looking, it's a $15 Canadian share company. Can it really 10x from here? Maybe I'll go start in an earlier stage royalty company. So who is the ideal shareholder for you?
Well, maybe I'll describe what I think is distinctive about our business. And then if those distinctive or differentiated characteristics resonate, then the listener can self-identify as the ideal shareholder or not. I think we're in an interesting space. If you look at our company, as I said, we're just under $2 billion of market cap. We're producing a lot of cash flow, but we're at a size where if we do a $500 million deal or a $250 million deal, it really moves the needle. It makes a big difference. If you're $26 billion, $500 million deal or less really does not very much. So we're at a size where the deals that are most frequently in the market make a big difference to the size of our company. So I think that's really distinct. Now, on the smaller end, those companies typically can't compete for that scale of deal. They don't have the financial capacity. And in a sort of mid-tier size, we've really got, Sandstorm and Cisco. They've taken a slightly different approach to create value. They've tended to buy, royalties and streams, and have done a good job at that. But they also have large equity stakes in development stories. We don't have that. So we have a business model that is very pure and strictly honors the traditional streaming and royalty model. Does not have the equity exposure, which increases risks and impacts the ability to produce sustainable cash flow. So we think that's quite distinctive. We're a really interesting size with a really clean business. The architecture is quite similar to Franco, albeit on a smaller scale, insofar as we have large streams, royalties, and then a large pipeline of earlier stage royalties that we think would be interesting, as time goes on. But we don't have, oil and gas and some of the other commodities. So that's how I think the business is positioned. Coupled with that, you've got a dividend that is, last I checked, was one of the leading yields for a stock of that price in the sector. That dividend is really sustainable for us, and we see ourselves as a dividend grower. So, much the same as some of our competitors have done historically, we look to keep growing that dividend. So we think that's distinctive. Our track record has built this business from zero to where it is today in 5 or so years, and we want to continue that. So we see this growing into being eventually a senior streaming and royalty company. So the way I kind of think about it, it is Franco-Nevada IPO'd in 2007 at $1 billion. If you look at investors at the IPO of Franco-Nevada, I can't remember what the dividend yield now is, but it must be like 9% or something like that. And they've benefited tremendously. So we see ourselves as positioned to grow the next senior streaming and royalty company that's right up there with the biggest in the sector. And I think investors coming in now, we want them to be part of that journey. So that's kind of how we see ourselves in the space. So if that resonates, then great.
It's an exciting story. Thank you for sharing it with me. I do have a recurrent segment though, and we got to get going on it. It's called The Vault. Yeah. It's 3 mentorship questions not related to your company, and just looking for life advice, not investment advice, from my guests. Well, let's get into it.
Okay.
So first question, what did your parents teach you at a young age that has stuck with you to today?
Yeah, it's a really interesting, a couple of things, I suppose. My father was a building contractor in the UK. My mother is a social worker. So I think their background's probably reflected in that. But I think that the most fundamental one that was ingrained in me was just hard work. And it sounds obvious, but I worked as a young age laboring on construction sites with my father. And I learned the value of the £30 a day I was getting paid at the time, digging trenches on my own for days on end. And that connection between hard work and what at the time was some money that kind of was in my pocket for me to spend, really stuck with me. And I think learning the value of money is really important. And that stuck with me today. As a shareholder in Triple Flag, that it stayed the same. We look for is there a cheaper flight? Can we save money here? That philosophy of really understanding the value of money, I think is important, and it comes back to just hard work. I think the other one was I was always told to do whatever I want as long as it made me happy. I was never told to go and be a dentist or a lawyer or whatever. And I think that's the philosophy I followed all the way through my career. Is I want to do interesting things that satisfy me and work with people I like and respect. And that more so than compensation or title or anything has been the guiding force of what I've set out to do. And now things have, it's been a good career so far, but I think the best thing for me is I've learned so much. I find it fascinating every day. And I can look back and honestly say at any time in my career, I've been working with people I really like and respect. There are some people I like more, and some people I respect more, and whatever. But I think that if you pursue that, I think that's makes for a much more rewarding experience than getting the next title, the next bonus, or whatever it happens to be. So I think that those are the 2 lessons that have stuck with me the most. And well, probably I'll add a third, but empathy. I think people struggle to stop and think about how their actions impact others. And I think being empathetic and open-minded is another one that my mother in particular, being one of 4, really helped me think about.
No, I agree with that. I'm one of five. I have four brothers,
Okay.
and I respect people that come from the hardworking class because my dad was a logger, and I got doing all kinds of, yeah, physically demanding jobs as a
Yeah.
young kid too. So I know, and it's funny when you transition to a desk job or something, it doesn't mean you stop working less. You get that ingrained in you.
Yeah,
Uh,
exactly. It's hardwired.
mhm. Second question. We are the Wealth Holders podcast. So can you name a high net worth individual or wealth holder? And if you don't want to disclose their name, that's perfectly fine. But what did he or she teach you either in business or in life?
I think I'll withhold the name, but I think really the most important thing is integrity and the value of integrity, um, and all the way through whatever you're doing is making decisions that you can uh, be comfortable with absolutely the best decision you can make at the time for the right reasons, and holding on to that integrity in the face of uh, pressures that you might encounter, or either negative or positive. But I think that like fundamental integrity is the most important thing that has been impressed upon me. And then I think the other part is probably just being kind and decent to people. It's so simple, isn't it? And it sounds kind of ridiculous, but I think just fundamentally always trying to go the extra step to be just decent and kind to the people you're interacting with, even when you disagree with them or you're having an argument. It's to be good to the people even if you're hard on the issue. And I think those are probably the two characteristics that I think about the most, that it just so happens a high net worth person has told me or impressed upon me many times. I could have just as well had that lesson from a ditch digger, or it doesn't necessarily mean that high net worth is the best lessons, but that's one that sticks out.
Perfect. Thanks for sharing. And the last question, I'm just a 26-year-old starting my journey in life. Any advice for the younger listeners out there?
I mean, I wouldn't presume to give people advice. I could share what I think has been a reasonably enjoyable approach to things. So I'd share an approach rather than an advice. I don't really feel qualified to give advice on that. But I think it just goes back to what I said earlier. Follow what you enjoy doing as the most fundamental driving force, provided it's a good and productive use of your time. And I think open-mindedness is critical as well. As I've gone through my career, I think being open-minded and willing to look at things differently or try something I hadn't really tried before, it has been really rewarding and some of the most enjoyable experiences too. So I think, pursuing interest and satisfaction at the same time as being open-minded is an approach that I've tried to live by. It doesn't always work, but I've tried, and I continue to try doing. And I've got two young children, and I'll be telling them the same thing. So.
Thank you. And I think I heard those little tykes upstairs a couple of
Yeah,
times.
sorry. Yeah, yeah.
No
There's one
worries.
of them. The 8-month-old makes a disproportionate amount of noise. So apologies for all the bangs and thumps that you might have heard.
No worries. Thank you so much for your time. I really appreciate it there, James. I do like letting my guests have a little opportunity to just say anything to the listeners out there to close us off if you want to, but thanks for joining us.
No, it was great, and I enjoyed it. And like I say, I certainly don't have all the answers, and I wouldn't warrant the life advice that I give. But hopefully, I've shared a few things that might make people stop and think. And don't worry if you're not the CEO of a company at whatever age. And I think there's too much pressure put on people now to succeed, and and have certain things by a certain time. But do what makes you happy, and you'll have positive reflections, I'm sure.
Perfect. Thank you.
Yeah, absolute pleasure. Thanks for having me, and look forward to speaking again.